What happens when a single financial institution quietly stockpiles enough silver to rival the reserves of entire nations without the world noticing? While headlines chase tech stocks, cryptocurrencies, and political drama, one of the most important commodity stories of our time has been unfolding in silence. No press conferences, no breaking news alerts, just a slow, deliberate accumulation of real, physical metal. Today on The Market Man, we uncover how JPMorgan Chase positioned itself at the very center of the global silver market, building a strategic stockpile so large it could reshape prices, supply chains, and the future of this critical metal. This isn't speculation. This isn't internet rumor. This story is written in public data, legal records, and market structure itself, and once you see the full picture, you'll understand why the silver market may be sitting on a ticking time bomb. The inheritance that changed everything. Fruits of this story trace back to the 2008 financial crisis, when Bear Stearns collapsed. The US government engineered an emergency takeover to prevent systemic failure. What most people remember are toxic mortgages and failing balance sheets. What few remember is this: along with Bear Stearns' banking operations, JPMorgan Chase inherited one of the largest precious metals infrastructures in North America, including COMEX vault access and bullion operations. This moment quietly placed JPMorgan at the gateway of physical silver, building the position nobody watched in. The years that followed, most banks retreated from commodities. Risk was unpopular. Physical assets were considered inefficient. JPMorgan went the opposite direction. Through its role as a clearing member and vault operator on COMEX, the bank steadily took delivery of physical silver, converting futures contracts into real metal. Bar by bar. No bidding wars, no price spikes, no attention. Just delivery. By the time the market began to notice, JPMorgan-controlled vaults held roughly 169 million ounces of physical silver, an amount equal to a meaningful share of global annual production. That is not a trade. That is a strategic reserve. The irony no one can ignore. Here's where the story turns uncomfortable. During the same years JPMorgan was building its physical silver position, its traders were engaged in illegal manipulation of precious metals futures. In 2020, the bank agreed to pay $920 million in penalties to the U.S. Department of Justice and the Commodity Futures Trading Commission for spoofing gold and silver markets. Spoofing, placing fake orders to push prices lower, kept silver artificially suppressed for years. Let that sink in. While paper prices were being pushed down, physical silver was being quietly accumulated at bargain levels. When the fines were paid, the position was already built. Why silver is no longer just another metal. For decades, silver was viewed as gold's quieter cousin, a monetary metal, a hedge, a relic. That era is over. According to data from the Silver Institute, industrial demand now accounts for roughly 60% of total silver consumption. Silver is essential for solar panels, electric vehicles, medical equipment, electronics, water purification, 5G infrastructure. Every solar panel consumes silver. Every EV uses more silver than a gasoline car, and once used, much of that silver is gone and economical to recover. Demand is structural. It is not cyclical. A supply system that can't respond. No, look at the supply side. Global silver mine production has remained flat for years, around 830 to 850 million ounces annually. Why? Because nearly 70% of silver is mined as a byproduct of copper, zinc, and lead mining. That means higher silver prices do not automatically create more supply. This is what analysts call inelastic supply, a dangerous condition when demand accelerates. The result? Persistent structural deficits. Inventories are drawn down year after year to bridge the gap. The shrinking visible. Stockpiles, exchange inventories, and ETFs tell the same story. Silver. ETFs once held record amounts in 2020 and 2021. Since then, hundreds of millions of ounces have left those vaults sold, redeemed, or consumed by industry. COMEX registered silver, the metal available for immediate delivery, has steadily declined from its highs. Refiners report growing difficulty sourcing standard. 1,000-ounce bars, these are not price signals, these are stress signals. Asterisk. jpmorgan's strategic advantage place jpmorgan's stockpile into this environment. That silver is not circulating, is not balancing supply, is not available to industry or investors. Every ounce locked away tightens the market further. The bank doesn't need to manipulate prices anymore. Its mere ownership changes market dynamics. Scarcity does the work. As analyst Ted Butler has long argued, control of physical metal, not paper contracts, is where real power lives in commodities. Asterisk. Lessons from history. In 1980, the Hunt brothers attempted to corner the silver market. They used leverage. Regulators changed the rules. The position collapsed. jpmorgan single quotes S situation is fundamentally different. No excessive leverage, no rule-breaking accumulation, full regulatory access, physical ownership. This is not a speculative squeeze. This is structural positioning. Asterisk. What a real silver squeeze looks like. If global silver market is tiny, total annual production is worth less than many individual tech companies. If even a small fraction of global investment capital reallocates towards silver as a hedge against inflation, currency debasement, or geopolitical instability, the market cannot absorb it. Prices don't rise gradually in these conditions. They gap, and when they do, the largest holder benefits first and most. Asterisk. Here's the truth most investors never hear. Silver isn't boring. It's misunderstood. While the world focused on noise, Morgan Chase spent more than a decade building a physical silver fortress quietly, legally, methodically. They understood the math. They understood the supply constraints. They understood where industrial demand was headed. And now they sit at the center of a tightening market while everyone else competes for what's left. On the market, man, we don't chase hype, we follow structure, incentives, and hard data. The silver story isn't finished. It's only just being noticed. And the clock is already ticking. Asterisk.